Hey guys, it's Chris Lamm with Commerce Home Mortgage. This month's edition for May, we're going to touch on a couple things, starting with interest rates being at a one-year low. We're going to talk about home prices being super strong this spring and early summer. And we're going to finish with the three types of loans that we're seeing a lot of people looking at right now and why we think they're important to look at. So, talking about interest rates, I know it's a super exciting topic. Not really, unless you're someone who's considering refinancing or buying a house. But it's something for us we really want to keep tabs on and make sure that the people that we've worked with over the years are aware of what's happening. So currently, this is a good news for the housing market. Rates are still at about a one-year low. Mid-May right now to late May, rates are in the low fours. Now that's obviously depending on what type of loan you're doing, credit score. They can range from the low fours up to over 5%, depending on those factors. But overall, about a full percent lower than they were just a little over a year ago. So this is really great news. We see that really giving a lot of people an opportunity to refinance and purchase at a lower payment than they would have this time last year. The second thing that's a really big topic right now is home prices. I saw a local report this week from a local appraiser that puts our median home price in Shasta County at $326,000 for the month of this is for the end of April. And I'm sure May will be a similar trend. Now, just to give you perspective, that's the highest point that we've seen the median home price in Shasta County, I believe, since 2008. And so that's really, really exciting. And I think it really just paints a picture of what's really taking place in our market right now. We are seeing a lot more inventory coming into the market. We've been talking about low inventory or not enough homes to meet the demand for the home buyers that are in the market. This last few months, as the sun has come out, the grass has gotten greener. It's always the same thing this time of year. A lot of people are going to bring their homes out and try to sell them at the best price while their home's in the best shape, or at least the grass is greener and the flowers are blooming. And so we're definitely seeing that right now. And a lot of the people that have been pre-approved for the last year, the last few months, that have been sort of frustrated with what they're seeing are starting to find the homes that they want, and we're certainly seeing that. And so the last thing we want to talk about is the three types of loans that we're seeing most people do, starting out with a cash out refinance. Anyone that's bought a home in the last few years has probably seen a pretty good uptick in appreciation, or their home's worth more. And so we're seeing a lot of people right now with lower rates, not only dropping their interest rate, but also maybe taking some of the equity out of their house to pay off higher interest debt that they may have, student loans, credit card debts, etc., while also maybe pulling out money for home improvements, remodeling. We had someone just put a pool in their house. And there's a lot of people taking money out to put in solar so that they can not only save money on power, but a lot of people are starting to want to move away from PG&E due to things like car fire and some of the things we've seen in the last few years. So if that's something you're considering, definitely give us a call. The second one is a rate and term refinance. This is someone that just simply wants to take their interest rate, drop it to a lower rate, and save money on their mortgage. A lot of people doing that right now. Generally, if you can save enough on a monthly basis to justify it by covering the closing costs or recouping whatever the closing costs are within 1 to 3 years, it could be a good idea to look at that. Also, people taking it from maybe a 30-year to a 15-year and improving the term to pay less interest over time and to pay that house off faster. And last but not least, we have a lot of move-up buyers, people that bought a house in the last 5 to 10 years. They have a lot of equity. The home that they currently have does not quite meet the needs that they have for their family now. And so they're cashing out while they can get a lot for their home, buying something newer with interest rates being at the point where they are today. So those are the things we're looking at. As always, we're super grateful for you guys and all the referrals you've sent us. For the clients that have continued to work with us all these years, thank you so much. And as always, if there's anything you need from me, please don't hesitate to call me directly here at the office. Thank you so much for checking out this video blog. Feel free to give me an email if you have any questions, and have a great day.